everyone, welcome back to my channel. Today's topic is going to be about the different investment options in Singapore. So in Singapore, we have a myriad of investment options, and then I'll be analyzing all the different type of investment options that I can come up with. It's quite comprehensive, and then I'll give you guys the pros and cons, and then you guys can make a decision on what kind of investments best suit your needs. Okay, so let's run through them. Let's go. Okay, so like I mentioned, I'll be running through all the different investment options in Singapore, and I'll do an analysis of the different investment types and share with you guys the pros and cons. Okay, first let's get down to the definition of what is an investment. Okay, investment is an asset acquired with the goal of generating either or both an income or capital appreciation. Okay, so your investment is aimed to either generate you an income or capital appreciation, or both lah. Yeah, best is both lah. Yeah, but not many assets generate both. Okay, why do you need investments? Obviously to keep pace with, or even better, beat inflation and grow your wealth. Okay, so this just the CPI rates I got from Smart Wealth. So inflation of all things was high in 2008 last, then now is peaking again, so probably maybe we'll hit 6% next time again this year, okay, or next year. Okay, so but average headline inflation is not that high lah, but I think actually it's not supposed to be that low. It should be about 2 to 3%, so this is a bit off. Okay, so investment periods, you will split into 3 types. So one is short term. So short term is less than 1 year, usually emergency money in the case of unemployment, insurance premium, all these you need to use for short term. Okay, then medium term is something like around 3 to 5 years, and then you have like planned purchases such as a car, house deposits, or like renovation, marriage. So all these things you can plan, so it's like medium term. Okay, then long term can be minimally 10 years lah. Usually long term investment is used for retirement planning lah. Okay, unless you are planning to buy a house in 10 years, also can do long term investment for that. Yeah, but it's usually used for retirement because you want to start early and then compound the interest lah over the different many years. Okay, so time is your best friend if you're young. Okay, investment types, these are the comprehensive list. I'll run through fixed deposit, bank accounts, SSB, T-bills, SGS bonds, endowments, CPF top-ups, corporate bond, preferred stock, structured products, REITs, Roboadvisors or cash management account, ETF, unit trust, investment linked product, and funds. So all these, right, the underlying things are all funds lah. So I just like lump them all together, just call them funds. Okay. Then common stock, property. Common stock is equity lah. I mean, if you don't know, I just put it down. Equity, property, commodities, foreign currency, as well as collectibles. So collectibles is interesting, right? It's like watch, those kind of luxury watches, bags, all this. Yeah, so real items, collectibles, not a financial instrument. Okay, private equity, venture, growth capital. I just put all these together lah, because like all high risk one. And then distressed security. So distressed securities, later I'll explain. Cryptocurrency or NFT. Okay, so everyone knows cryptocurrency is very risky as well. Yeah. Okay, so we will start with the first type of investment, which is a fixed deposit or like bank accounts. Okay, so I haven't updated these slides, but let's quickly update it. Okay, so put in the bank for a predefined fixed period and withdraw in full upon tenure expiry. So depending on your fixed deposit, what is the terms and conditions, you may be able to withdraw in full and then still get some interest lah, depends. Okay, so you don't need financial knowledge to do all these things lah. Every layman will know how to do this. And then this is the Singapore deposit rate lah. So it was on a downtrend ever since I think this is about 1998, and then now it's slowly peaking again to about 4%. Okay, so tenor and liquidity is usually between 1 to 60 months. I don't think you ever see a fixed deposit for 10 years. So usually fixed deposit maximum I think will be about 5 years, and then you are able to withdraw with no loss to capital, but interest can be 0%. So like I mentioned, if you withdraw early, you can get back your capital, but you don't earn any interest. Okay, so because of the short maximum tenors, it's not a long-term investment plan, so you cannot be always putting in fixed deposit. Okay, you always need to find new fixed deposit. So let's say now the interest rate is 4%. Is the interest rate going to be 4% 5 years later? No, right? So you need to find other investments. So it's not a long-term investment plan. So you constantly need to search for new placements once the existing tenor is over. Okay, risk and volatility wise is safe and then insured by SDIC, up to 75k per bank, and then not much, I mean technically no volatility unless the bank go bust. When the bank go bust, it's still insured. Okay, then minimum investment is low lah, start as low as $500. Okay, returns usually from last time the rates are 0.12 to about 13% highest, I guess. Historically lower than 2% in the 2000s lah. Okay, so usually fixed deposits are unable to beat inflation, used for short-term liquid cash like your insurance payments or other medium ticket items like small furniture purchase. So like, you know your fridge is going to spoil, you put in a fixed deposit first for it to grow, and then when your fridge actually spoils, like usually a warranty expire, the fridge will spoil, right? Yeah, that's what happens. So yeah, that's why you plan for it lah. Then you take it out from your fixed deposit, buy a fridge, and then if your fixed deposit haven't expired by then you try to make do with the spoiled fridge for a while before you take out your fixed deposit. Yeah. So in Singapore, interest income is not taxable for individuals. Okay. Next, second item is government bonds, T-bills, SGS bonds. Okay, so what's the difference between all these three? Okay, so these are all my references. Okay, so Singapore Savings Bond is a safe and flexible bond option for investors. The tenor is always 10 years, and then if you want to withdraw before 10 years, you can always withdraw in full, and then they will pay you the following month. So let's say now it's already 25th November, I will withdraw next month, so I can withdraw now and then I'll get it 1st of December. Okay, minimum investment multiples of 500, fixed coupon every 6 months, steps up each year. Okay, so it's a tiered one lah. So like maybe start from 3%, then slowly they increase to 4% at the 10 year. So your average rate 3.5% if you have that kind of rates lah. Okay, then interest rate is always released every month before you get to apply. So the average 10-year yield with the lowest being around 0.8% in 2020. However, recently it's around 3.21% or 3.47% lah. Yeah, so I haven't updated this slide. It's actually 3.47 recently, and expected to go higher because the Fed increased interest rate again. Okay, so all this usually is around the inflation rate, used for short-term liquid cash. Then interest income and the capital gains are not taxable. There's no capital gains actually. Yeah, there's no capital gains. So interest income is not taxable in Singapore for individuals lah. Yeah, we remove capital gains because all these are mainly to earn interest income. So there's no capital gains. Okay. I mean, if you trade it, then maybe there's capital gains, but yeah, so we will remove it. Okay, next, government debt securities. This one is many different years, got even up to 50 years. So no early redemption. If you want, you can trade it on the market and fluctuate based on market condition. Okay, so this is issued in the multiples of $1,000. You will get a fixed coupon every 6 months, and then these prices are determined by auction, and historically around 0.5% to 6%. Okay. Then T-bills, this one is very popular nowadays because it's a short-term government debt securities. So either 3 months, 6 months, or 1 year. So no early redemption, and it's tradable based on market conditions. So usually it's very illiquid. Nobody trade T-bills one, so very hard for you to sell. Okay, there's no coupon. It's issued at a discount to face value. So let's say they're giving you 2%, they issue you 9,008 lah. Then you 9,008 for your, I mean 980 for a $1,000 T-bill lah, that kind of thing. Okay, so determined by auction, and then around 2 0.27% to 4.6% since 1998. Okay, so all these things are the same lah. Inflation and taxation, all the same. Okay, next is endowment plans. I mean, this is from insurers, and then this is usually locked in, and then if you surrender before maturity, you surrender at loss lah. Yeah, usually, but some even up before maturity is not at loss lah. So depends. So it's an insurance product with a savings component using a par fund. So what's a par fund? Underlying asset is a mixture of bond and equities, and then claims experience of the fund lah. So let's say a lot of people die after they buy the endowment, then the claims experience is cui. Cui means not good. Then the returns might not be that good also. Okay, so tenure and liquidity depends. Usually starting from 2 years minimum. Is a minimum tenure, so no or little liquidity, as surrendering before maturity will incur surrender charges. Okay, so for endowment plans, usually you can also withdraw the bonuses without affecting your sum assured lah, if you want to lah. Okay, so it's up to you. Depending on the endowment plan itself, it can be also an annuity that it pays your monthly income. It's a very different kind of endowment. Okay, so many endowment, many annuities. Okay, so guaranteed. There's a guaranteed portion and non-guaranteed portion. So the guaranteed portion has no risk, the non-guaranteed portion with some risk, and depends on the par fund performance return. So like I mentioned, it's a mixture of bond and equities. Then this is not very volatile, as usually the bonuses declared every year is smoothed out by the insurer lah. Yeah. Okay, so minimum investment depends. Usually if it's a single premium, usually at least 5k. Then if it's a recurring premium, means every year you pay one, right? Usually around 1k. Okay, so the returns is about 2 to 5 or maybe sometimes 6% in high interest rate environment, 2 to 6% per annum. Okay, inflation and taxation. I mean there's also 1% one, so depends. 1 to 6% per annum. Okay, barely beating inflation, and usually used for pre-planned purchase of a medium-term stuff lah, like overseas holiday. You know you want to go holiday in 5 years, maybe go US, whatever, big ticket items like cars or property down payment, because you want these things to be safe, and then you plan it right at the time, right? If you go into investment, don't know up or down by the time you want to buy, right? So if you want safe and then beat inflation a bit, then you can use endowment lah. Okay, there's no taxes payable upon maturity. Okay, so this is why some people will choose endowment if they are considering property and endowment lah. So depends lah. Yeah. Okay, so CPF top-ups. This one is one area you can use as an investment. Okay, because CPF top-ups will go into your CPF Life and become an annuity payment lah. So CPF cash top up can be either to 3 accounts or SARAMA. So depends on what you want lah. So if you want to cash top up to all 3 accounts, then sometimes some only go into OA, then the interest rate is only 2.5. 2.5 might not be enough to beat inflation lah. So most people, when they do CPF top ups, they will choose to SARA or MA. So this is 4%. Okay, then what's the tenure and liquidity is you cannot withdraw top-ups after 55 years old, then can only be used for CPF Life or medical bills. So if you top up, you cannot take it out lah. So it's locked in for a life lah, sort of. Yeah. Okay, so it's a very safe, insured by not insured, when the government say it's safe. Yeah, rates unlikely to change, but it's up to the government to determine the actual rate. So I went through this CPF topic about CPF interest rates before, so you can go and watch that video if you guys are interested to find out how CPF price their interest rate. Okay, minimum investment not applicable lah, so anything works. Okay, return of either 2.5% or 4% depending on which account. Okay, inflation and taxation, so usually same as endowment, barely beating inflation, and used for retirement planning usually to get an income or annuity lah. So the withdrawals are, as you know, CPF top up, maybe you get tax saving, and then after that withdrawals are also not taxable. Okay, next, corporate bonds or preferred stock. Okay, why do I group these two together? Because corporate bonds is technically you lend the company money, and then preferred stock, right? Actually, preferred stock is not really equity, because it's like, I mean, they term it under equity in the balance sheet, right? But basically it works like a bond, but it's like a bond forever, that kind of thing. So I will group them together. So This preferred stock also have no voting power, so technically it works like a bond, so I just group them together for investment sake. Okay, so it's like I mentioned, it's lending corporate money and then they pay you a coupon at fixed intervals. Okay, so tenor and liquidity depends on their maturity, usually around 10 years. If it's tradable, then you can sell it off lah. So if you sell it off, depends on the market value, and then the risk and volatility is depending on the individual company's financial position. So if the company is experiencing like going to bankrupt already, right, then it's gonna, I mean, their corporate bonds is definitely going to drop in value depending on whether this corporate bond is secured or unsecured. So let's say if secured, right, then sometimes you still might not get back the full value lah. So doesn't mean that it's secured means it's very safe. Okay, yeah. So minimum investment depends lah, depending on what the company issues, but typically it starts from like $1,000, and the returns are usually higher than government bonds. Usually about maybe 1 to about 7% per annum, depending on how risky this company is. So like the government, I mean the company itself, right, if it's not on very good financial standing, then definitely they are okay to offer you a better interest rate, because like maybe banks don't even want to lend to them, but then you guys are willing to lend to them, that kind of thing lah. Yeah. Okay, so inflation wise, it can beat inflation, so used for getting very good coupon income for your daily expenses, and then all this corporate bond income and any capital gains are not taxable in Singapore. Okay, so next we move on to structured deposits. So these are the favorites of like banks. Banks always like to promote these structured deposits to you. So they'll tell you it's like a fixed D, and then after that you can get higher rates than fixed D, and then your capital is somehow protected. So the capital protection, right, is in a way that they use corporate bonds for corporate protection. So like they will invest like a certain percentage into corporate bonds, and then the corporate bonds, right, at maturity will give you back your capital. But if the corporate bonds F up, right, then you might get back your capital lah. So that's the problem with structured deposits. Okay, so it's a market link. Then what's the remaining that they don't use for this corporate bonds, right? They will use for other market financial instruments. So it's to give you a higher return lah. So let's say they do a mix of corporate bonds and other kind of complicated financial products. So usually they either invest in options, because the remaining money will not be enough to even invest in most equities or stuff, right? So usually it's more other complicated financial products that they will invest in that you don't even know about lah. So yeah, usually options, because they can give you high returns, that kind of thing. And then tenor and liquidity wise depends. Usually traded over the counter and not very liquid. And then depending on the underlying asset allocation, there's a credit risk and also a lack of transparency. Okay, minimum investment amount depends lah, usually quite high lah actually. And then return usually about 5 to 10% linked to market performance. Okay, so this is used for, what is the use is to use to keep up with inflation. Usually returns are also not taxable in Singapore. Okay, next we move on to REITs. This one is a lot of Singaporeans' favorite because everyone loves properties, but not everyone can keep buying properties, right? So they buy in the REITs to get a portion of the property returns. Okay, so how do REITs work? So this is how REITs work lah. So you put in money, then the REITs will go and buy real estate, and then they will manage it. And then when they generate rental income or they grow in capital value when they sell it off, then they will give you profit. So the profits, then they will distribute the dividends back to you guys. Okay, so I mentioned this how it works lah. So this is the example. And then usually REITs can be traded. Liquidity depends on market opening hours also. And then property associated risk is associated with REITs lah, because if property is booming, then of course REITs will do well. Okay, and then also depends on individual company REITs, the REITs management lah. So the person managing the REITs should be good. If not, like it will not generate good rental value lah. So let's say they buy a property that is in a not so good area, and then nobody wants to rent anything there, then there's no income to be generated lah. So also depends on the management. Okay, so typically investment amount is about $1,000, and the returns is about 6 to 7% per annum. Okay, so this helps to beat inflation and usually used to generate extra income, and this is tax exempt for individuals that are investing in REITs. Okay, next we move on to Roboadvisors, and they also have cash management accounts lah. So other than investing accounts, they also have cash management account. Okay, so what are the pros and cons of Roboadvisors is already summarized here. Okay, so the product explanation, right, is just a digital investment providing automated algorithm-driven financial planning services with little or no human supervision. Okay, so depending on your goals and risk appetite, right, they will ask you a survey, then they will determine a suited portfolio for you, and then you will go and invest in this suited portfolio. And then usually they are quite transparent about what they are actually investing in. Okay, so depends on your actual robo-advisor. So underlying assets are usually exchange traded funds and other financial assets. So tenor and liquidity wise, usually they have no lock-in, and then risk and volatility, you need to look at the underlying investment that you are investing in. Okay, so minimum investment is low, some even maybe $1. Okay, depends on the returns also depends on the underlying investment. Is not capital guaranteed, and this is usually designed to beat inflation, depending whether you are using a cash management account. If a cash management account is barely beating inflation. Okay, so all this capital investment not taxable in Singapore. So yeah. Next, we move on to ETFs. Okay, so like I mentioned, why I lump all these few together is just because they are all funds. So they are a mix of mostly equities, bonds, and other financial instruments based on the fund sector and index. So you can have funds that say they focus on tech, funds that say they focus on like maybe commodities. So there's a whole range of funds available. Okay, and then for tenor and liquidity wise, usually all have no minimum holding period, except some investment linked products have a minimum holding period in order not to incur surrender charges. So if the surrender charges have ended, then there's technically no more minimum holding period. Okay, then risk and volatility wise is diversified. This is what I like about funds, because it's diversified. So it's less risky and volatile than you investing in individual stocks. Okay, and this usually moves with the market and the sector. So depending on the sector, sometimes the market go up but the sector go down, then no choice. So depending on what fund you're investing in, if it's a market fund, then it will move with the market. If it's a sector fund, then move with the sector. Okay, so minimum investment depends, usually quite accessible, means quite low amounts. And the returns depends on the underlying investment and could be negative, so not capital guaranteed. And then inflation and taxation wise is usually designed to beat inflation, and returns are usually not taxable in Singapore. Okay. Next, we move to a lot of people's favorite, which is equities, which is also termed as common stock. Okay, so these are net assets. I mean, to explain what is a common stock, it's a net asset of a company, usually tradable. So we are talking about tradable common stock. Okay, so value is determined based on the future cash flows of the individual company. This is a fundamental view. There's also a technical view. So yeah, so tenor and liquidity wise is usually not applicable, no tenor. So you can sell, because if it's tradable, then you can sell anytime during the market open. Yeah. Okay, risk and volatility wise depends on individual companies, and it's not capital guaranteed and subject to speculation, insider trading, and many other things. Okay. Minimum investment depends on your broker and the share price. So most brokers will allow your fractional shares, so you can start from low amounts as well. Okay. Returns depends, can have a very big range into negative and positive range. So it could be negative 100%, could be positive 100% as well, depending on the actual stock. Okay, can even be more. So it's usually designed to generate passive income through dividends and beat inflation. So for dividends in Singapore is not taxable unless you're investing in overseas market. That one is taxable based on the individual country's laws. So if you're investing in Singapore stocks, it's the dividends are not taxable, and then also you guys, if you have any capital returns, you sell the stock, is also not taxable. Yeah. Next, we move on to the Singaporeans' favorite, which is property. So what property is supposed to generate is to generate rental and capital gains. So rental is from you renting out your property, and then if you don't want to rent out your property, then you don't have the income, but you can still hold it to achieve capital gains. So capital gains is when the property go up in price. Yeah. So for tenor and liquidity wise, of all the products that I've shared, right, I believe this is the most illiquid one. So it's like very hard for you to buy and sell. Not like stocks like press buy and press sell. No, you need to engage a middleman, need to do a lot of work before you can actually buy and sell, that kind of thing. Okay. Risk and volatility wise is actually quite high. So because of the speculation of demand and supply, also depends on
largely on government policy. So the government can suddenly have a super bad cooling measure, then the property prices really deplete a lot. Then yeah, there goes your investment. Okay, so highly speculative lah. Okay, so minimum investment is high. Usually need at least a few hundred of thousands, and then usually you need to take a loan in order to buy a property lah. So depending on how rich you are, you can buy a property or not lah. Okay, so returns wise, rental, usually the net rental yield is about 2 to 3%. Why I say net rental yield is because rental is actually taxable as an income. So net rental yield that you can get after tax is usually about 2 to 3%. So it's not very high lah. It cannot beat inflation. So if you are just looking at the income wise, then you are barely beating inflation. You might as well put into another asset. Then usually if you have capital gains on property, that's where you make the most money. So if your property is not expected to generate any capital gains, right, you're better off putting your money elsewhere. Okay, so capital gains is depending on how the market moves. Okay, so real estate prices actually based on inflation rates, right, and all the data, it grows faster than inflation, so usually able to beat inflation for the capital gains lah. Okay, so rental income like I mentioned is taxable. Okay, then capital gains not taxable lah. So depend on how frequently it's sold. So let's say you always buy and sell properties, right, then it's not going to be counted as a capital gain lah. The government is going to find a way to tax you on your gains. Okay, next we move on to commodities. This commodities trading is not really traded by most people because needs a lot of knowledge, and then it's also controlled by a lot of those kind of institutional funds lah. Okay, so what you can do for commodities, you can directly buy the actual commodity, or you use a futures contract or those kind of exchange traded products tracking a commodity index. So this is what I can do for commodities. Then tenure and liquidity wise, if it's a normal, it's the actual commodity, like you really buy wheat or you buy oil, all this, then it's not going to be very liquid lah, unless you set up a shop and sell all this, right? So actual commodity not very liquid. Then exchange traded product is going to be tradable and quite liquid lah, depending on the market opening hours. Okay, then risk and volatility wise is actually quite high, and then these are all actually very complex products. And these products, right, even though it's compounded into an index fund or whatever, right, it's still not going to be very diversified because all these are just commodities. Okay, so diversification in this case does not even prevent loss lah. Yeah. Okay, so minimum investment depends, and then returns depends on the underlying commodity. So let's say you're talking about oil, then because of the war, then oil go up, but many other products can actually go down in because they are just inverse products lah. Yeah, so depends on the actual product and depends on the actual market conditions. Okay, so inflation and taxation wise, trading in commodities is actually very speculative, so it's supposed to help you beat inflation. But trading of actual commodities is taxable lah. So let's say you are trading actual commodities like buy and sell oil, all this is actually taxable for a business perspective. Okay, then financial contracts usually counts as capital gains and usually not taxable in Singapore lah. So depends lah. Yeah. Okay, next we move on to another way of investment, which is foreign currency. So buy and sell currency pairs or forex exchange traded fund. Okay, so foreign currency usually quite liquid depending on the currency you are trading. So if a currency not commonly used, then of course not as liquid lah. Okay, then risk and volatility wise, it is very high and it's very speculative. Okay, minimum investment depends on the broker or the money changer you are using, and return also depends, can be positive or negative. And then inflation and taxation, so supposed to help you beat inflation, and then usually it's not taxable in Singapore. Yeah. Okay, collectibles. This is a very rare that people will choose this as an investment, but I think usually during the COVID period, a lot of people started to dabble in collectibles. So yeah, so tangible assets that have the potential to appreciate in value. So usually luxury goods lah. Yeah. So depends, the amount of liquidity depends. So usually it's a medium liquidity because there's not much market for it. So even if you like list it on like Carousel, it takes some days for you to sell it, so it's not very liquid. Okay, and also high risk, so market might not be liquid as the buyers and sellers are not much, because if you're talking about luxury goods, then definitely not everyone is rich, right? So you have a limited market also as well. And then minimum investment, so depends on the actual asset you are talking about. So a lot of people now is trading in watches, like golf clubs, all these things, golf club membership. So all these returns are highly speculative and then could be negative as well. So let's say one day you hold this asset and then you really need money, then you can just quickly sell it if you drop the price a lot lah. So it could be negative. So designed to beat inflation. So if count as capital gains, then it's not taxable in Singapore lah. If you keep buying and selling all these collectibles, IRAS can tax you and it can be taxable in Singapore. Okay. Okay, next we move on to a super risky asset called private equities and distressed securities. So for private equities, right, it's actually the same as common stock. It's just that it's not tradable. And then distressed securities is like a company is in deep shit already. It's like super illiquid, and then you still continue to buy their securities. You try to bail them out, and then if you bail them out and they are successful, they can generate a lot of returns. Okay, yeah. So it's like taking a bet lah. Yeah. So like I mentioned, private equity is not tradable, so usually very illiquid as there's no market for it. You need to slowly go and find a buyer, and then someone like maybe those kind of M&A companies, they want to buy and acquire this sector, then they will buy it from you lah. Okay. So the risk and volatility wise is very high, so depends on the individual companies, and there is a high possibility of you losing your entire capital. So like I mentioned, for distressed securities, the company is already in bad shape, and then you still want to buy their securities to bet that they will become good in future. So it's a high possibility of losing your entire capital. Okay, so minimum investment wise for private equity, distressed securities, all this, it's usually quite large. And returns depends, can possibly have great returns, even doubling or tripling, but can also be highly negative lah. Negative means go to zero. Okay. Then inflation and taxation wise, if it's like running your own business, that kind of thing, can possibly generate a source of income via dividends, and dividend and capital gains are not taxable in Singapore lah. But technically the dividends are already taxed because they are taxed via corporate tax already, but that's not your business lah. You only need to know you can get dividend income and then capital gains. So this one, if it's like running a business, then depending on how good your business is, can possibly beat inflation as well. Okay. Okay, now we come to the last last investment alternative. It's a lot of people are dabbling in it already, but it was new a few years ago, called cryptocurrencies and NFTs lah. Okay, so what is it? It's an encrypted data string denoting a unit of currency using blockchain. Okay, so tenor and liquidity wise, you're able to trade on the exchange 24/7. This is a bit different from all the other products. You're able to trade 24/7 and very liquid is okay, I wouldn't say very liquid for all, so very liquid for all the bigger cryptocurrencies. NFT wise, then not going to be very liquid, so it depends. Okay, so risk and volatility wise is going to be high, so even for stable coins, as they might not be collateralized. I mean, judging from the recent crash of the UST, right? Yeah, UST, then you will know lah. So it's risk and volatility wise is very high, and then minimum investment usually is quite low. So as long as you join some exchange like crypto.com or CoinGecko, you can start investing from $1. Okay, so returns depends on the individual coin and market conditions. So not all the coins move in tandem with each other. So all those like more well-known coin like Bitcoin, then it's gonna be quite, I mean, not say stable also, but more stable than like a completely new coin. Yeah. Okay, so highly speculative with a high chance of negative returns, and can possibly beat inflation if it's a highly performing coin or NFT lah. NFT stands for non-fungible token. Okay, so that's another type of a cryptocurrency that so let's say one Bitcoin is equal to one Bitcoin, and it's exactly the same Bitcoin, but NFT is they got version 1, version 2, and then version 1 and version 2, all these are not counted as the same thing. Okay, so I did a summarized comparison of all the different investment types. Okay, so you can see based on ranking based on risk and reward, and I mean reward wise is reward can be negative as well. So yeah, risk and reward. Okay, so fixed deposit bank accounts will be the lowest risk, and reward wise is the lowest as well. Okay, then SSB, T-bill, SGS bonds also risk and reward one of the lowest, so I group them together. And then endowments and CPF top-ups, I just group them together because risk wise there's a guaranteed and non-guaranteed portion, so depending on the non-guaranteed portion, you can get a different rewards lah. So they are slightly a bit higher compared to fixed deposit and bank accounts. Okay, REITs, so depending on, okay, I mean REITs can actually have a bit of a capital appreciation as well, depending on how the market, I mean on the trading wise, whether it's traded up or not. Okay, so but definitely REITs also have more risk than all this fixed D, or so risk wise is a bit more, and then also rewards is higher lah. Okay, then I have also grouped property into lower risk than actually corporate bonds, all this, because property actually in Singapore is quite hard to go to zero, right? Yeah, so risk wise is actually lower than corporate bonds, all this, and its rewards it actually can be higher lah, because in Singapore where land is quite scarce, then reward wise you can actually get quite high rewards. Okay, so it's the risk is not inversely proportionate to the rewards for property, but you need a high amount of capital to get started lah. Yeah. Okay, so whereas all this you don't really need a high amount of capital, and then corporate bonds, preferred stock is a medium risk and medium reward lor, I will call this. Yeah. Whereas common stock, commodities, foreign currency is more high risk, high reward, and then definitely cryptocurrency is the most high risk and most high reward lah. Also private equity as well lah, all these stress securities. Collectibles also I would term it as high risk, high reward, because technically one day your membership can be viewed as super valuable, and maybe next day maybe not so valuable, because maybe other golf courses come up, that kind of thing, and no one can know, and it's a very highly speculative. These are more speculative, this is also speculative, and then property is also speculative. Yeah, so yep, this is a comparison, and then what is available, and depending on your risk appetite, you can go for the correct type of investments. Okay, so just sharing some of my personal favorites, short term wise, right, because I'm not super rich or whatever, so I will not be looking at property. Okay, so short term products I'll be interested in is like T-bills or like FD bank accounts. Okay, whereas medium term wise I'll be looking at SSB, because SSB I can hold for 10 years, right? Okay, then medium, and I can surrender anytime, like if I really need to go on a holiday or I need money or whatever. Okay, so I surrender, I can get it next month. Okay, medium term wise, if I'm planning to buy a property, buy a car, I also will be looking at like endowment, because it can grow quite well, and then I mean not grow quite well, it's like I can plan for it, and then I can actually get the money lah. I mean if I invest in like the stock market, right, let's say market is down and I want to buy my car, then I can't buy my car, right? So yeah, endowment is a more safe way of getting what I need, and then I can plan for the amount better. Okay, long term wise, yeah, I'm looking at property lah. I mean in case I get rich. Okay, then the more favorite more mainstream one is going to be funds lah, because funds is diversified risk instead of like equities, and then I can still get market returns, I can still beat inflation. Yeah. Okay, so these are my personal favorites, and then by no means these are financial advice, just my personal favorites. Okay, so if you have learned something new, thank you for watching this video, and then please help to like and subscribe. Okay, actually there are other types of investment options which I have not included in. For example, one is called options, okay, like financial options or this, because I think that these are all more speculative rather than investments, so I wouldn't term it as investment, so I've not included it in this video. I would find options more like gambling rather than investing, because technically, because you buy the option, right, then after it go up a lot in value, then you get money lah. But then if it doesn't rise to the certain value, then you don't get zero, so you lose your whole capital. It's a very easy decision. I mean, very easy to lose everything and or get richer. So it's more like a gambling method rather than investments. Yeah, so all this information is just for you guys to consider. There are many types of investments out there, so you don't need to only stick to one kind of investment. Always be open to considering new kinds of investment that can help you achieve your goals. Okay, so that's all for today. Thank you everyone. Bye bye.